to help us is Professor Giuseppe Fontana, Professor of Monetary Economics at Leeds Business School. Good morning, Professor Fontana.
Good morning.
Given Berlusconi's commitment to resign, he says he won't step down immediately. What impact will the delay have on the situation in Italy?
Well, it's, I suppose now the political process is taking its own role, and in a certain sense you have to accept that now some sort of political discussion has to follow the event of the last couple of days.
The whole situation with Italian debt seems to be about confidence. Will investors be confident with Berlusconi still there? Some may see him as the architect of the country's problems.
Certainly, that I think it's the clear message that the market have been telling Italy in the last few weeks. The problem of Italy, you're right, is that it has a very high level of government debt, and the question is how you are going to reduce that high level of government debt. Berlusconi, as the Prime Minister of the Italian government, made several promises, and it looks like that they were broken promises because the ECB then the G20 partners didn't trust those promises, and now they are telling to the Italian people and Italian government make sure that you are able to implement the reforms that are necessary.
Well, when it comes to debt, I mean, Italy's not alone. There are a number of countries throughout the Eurozone with heavy debt commitments. The one thing that will reduce that debt is, of course, economic growth, and there doesn't seem to be any at the moment, apart from France and Germany, across the Eurozone.
Yes, indeed. This is a very worrying scenario that now you're having in Europe, and unfortunately there hasn't been enough discussion, I think, about how to reduce the level of government debt. Certainly you could reduce the total amount of debt, but the other way is by increasing the growth rate of Italy. And Italy had a performance on the first, in terms of government debt, quite poor, has been quite high for several years, above 100% for more than 10-15 years. The level of GDP growth has been very low as well, around 1% in the last 15 years. So really something need to be done. But at the moment it looks like everyone is sort of running, or there is a race to austerity measures, which doesn't help Italy, and it will not help Europe, it will not help the world, really.
Yeah, well, I mean, the resignation got the thumbs up from American investors yesterday. Shares rose on the resignation announcement. But do you think this will allow Italy to get the economy back on track, or was that just a knee-jerk reaction by the Americans?
Yes, I think it's just, an immediate reaction. The real challenge is what's coming in the next few weeks and few months, really. It's what you do really with that level of government debt. I think really some things need to be discussed at the European level. I think more and more, to me, look like countries are left to their own national domestic policy. That is not going to solve the problem of growth for Italy, for Greece, for Europe and United Kingdom. If all we'll do is a race to austerity measure, I'm worried that this situation will be protracted in the time.
And have you any idea who's likely to take over as Prime Minister?
Well, there are different ideas. I mean, there is an idea to have a technical government, a bit like in Greece. In that case, the name of Mario Monti, an economist and well respected by investors and the professionals, has been put forward.
Okay, well, Professor Fontana, stay there just a minute. We're also joined here now in the studio by Bill Blaine, Senior Director of Special Operations at New Edge Group. Bill, good morning to you.
Good morning.
Italian bonds have been trading at record highs. We saw the 10-year trade, I think it's 6.7%, I think, yesterday. And how likely is it to hit 7%? 7% is important, isn't it? Because that's the point at which we saw bailouts for Greece and Ireland and Portugal and so forth.
Well, there's no line in the sand saying that 7% is the crisis level, but it pretty much looks where Italian yields are just now, that the market is, as the professor was saying, the market is losing confidence. Now, the thing is, the stock markets yesterday have taken this news very well. The coalition government in Greece, they like that. It looks like Greece might be getting somewhere. They like the news that Berlusconi is going to go and he's going to force through an austerity government as part of that package. However, the bond markets are more sanguine about what's going on.
Well,
And
the stock market is not putting its money on the line, whereas the bond market will be.
the bond market is more concerned what the long-term prospects are here, what the long-term reality is here, and that is zero growth in Italy means that they're not going to be able to pay their way out of their debt crisis. And that goes down to what the professor's just been saying about the structure of the Italian economy. So much of it is wrapped up in the public sector, and to change these resources, to redirect them into the private sector, isn't a 1 month or a 1 year or a 5 year thing. That's a long-term structural adjustment. And how long do the markets have to put up with that? So the bond markets are looking and saying, what's fixed? Berlusconi's going, but what's fixed? Nothing really. We still have an ongoing crisis.
Short-term solutions.
It is just another short-term blagon.
On the point about who's likely to take over, Professor Fontana mentioned Mario Monti. One would imagine that someone with an understanding of finance would be the right sort of person to do it. How about Lucas Papademos, the former vice president of the European Central Bank? He's well known in Europe's capitals. He's been the head of Greece, the head of the Greek Bank, and so forth. So, would it be the right thing to do to put the right person in rather than perhaps maybe the most popular publicly?
Well, we have had in the past in Italy an experience of a technocrat government where Romano Prodi came in, and that really didn't have terribly much effect on the Italian economy. They resolved some sort of short-term crisis. That was it. The problem is bringing in non-politicians, and this is something we were talking about yesterday, bringing in non-politicians in intensely political states like Greece. You wonder how much they're actually going to be able to do, and who's pulling the strings behind their back. Remember, it was the Athenians that developed the whole concept of democracy, but they also developed the concept of politics, which is who's actually controlling the guy who looks at the head of it. Now, I think we are quite concerned that even the introduction of a technocratic government in Greece won't actually solve the very serious financial and structural problems they have. Maybe in Italy it will be more effective, but we've got to see signs of real change. Let's get the austerity budget passed and let's see where they go after that.
Do you think the bond market is justified in its caution, or is it just taking a line which enables it to get a better yield?
No, I think the bond markets are being very, very pragmatic about what the real likelihood for Europe is. At the moment, the bond market is going into a risk-off phase, as we call it. That means they're buying the really safe names, which at the moment are German government bonds, UK government gilts, and of course US treasuries. They have very low yields. That's where most of the money is going. The people who are buying the Italian government bonds with their 6.7% are not the big real money accounts who are looking after yours and mine's pensions. They are speculative. They are the guys who are betting that the European Rescue Fund, this European Financial Stability Facility, is going to come in and guarantee them. I think that's a big risk.
Okay, gentlemen, many thanks for that. That's Professor Giuseppe Fontana from the University of Leeds Business School and Bill Blaine from New Edge Group.